15 years. That's how long Tim Cook ran Apple. This September, he hands over the keys. The new boss inherits a $4.6 trillion empire, a Siri rebuilt on Google's brain, and the first folding iPhone. One problem: the stock is priced for perfection. Here's the full story. And if you like daily deep dives, subscribe now. 1976. A garage in California. Steve Jobs and Steve Wozniak start selling a hand-built computer board for $666. 4 years later, Apple goes public. The real revolution lands in 1984 with the Macintosh, a computer you control with a mouse. But it doesn't save the company forever. By the late 90s, Apple is roughly 90 days from bankruptcy. 1997. Steve Jobs returns, and rival Microsoft injects $150 million to keep Apple alive. What follows is the greatest comeback in business history. The iMac. The iPod in 2001. iTunes. And in 2007, the iPhone. A phone, a music player, and an internet device in one. The smartphone era begins in Apple's hands. 2011. Tim Cook takes over from a dying Steve Jobs. Skeptics said Apple was finished without its visionary. Instead, Cook built the most profitable machine on earth. Market value went from about $350 billion to $4.6 trillion. He added AirPods, Apple Watch, Apple Silicon chips, and a services empire. Not bad for a supply chain guy. Apple's model is a flywheel. Sell premium hardware. iPhone, Mac, iPad, Watch. Lock users into an ecosystem where everything just works together. Then monetize that loyalty with services, the App Store, iCloud, Apple Music, TV Plus, Apple Pay. More than 2 billion active Apple devices are out there. Every single one is a storefront that sells subscriptions around the clock. The iPhone is still the engine. In the March quarter alone, iPhone revenue hit $57 billion, up 22% from a year earlier. A March record. The iPhone 17 lineup sold so fast that Apple's problem was supply, not demand. One product line, launched 19 years ago, still brings in roughly half of Apple's entire revenue. But the real profit story is services. $31 billion in a single quarter. An all-time record. That's more than most Fortune 500 companies make in a year. And service margins run roughly double Apple's hardware margins. App Store fees, iCloud storage, music, TV Plus. Recurring revenue that shows up every month, in good markets and bad. Zoom out to the full picture. Fiscal 2025 closed at $416 billion in revenue, an all-time company record, with double-digit earnings growth. And fiscal 26 is accelerating. The March quarter delivered $111.2 billion, up 17% year over year. Earnings per share jumped 22% to $2.01. Net income for that one quarter, $29.6 billion. Operating cash flow topped $28 billion, a March quarter record. Apple prints so much cash it has to give it back. $100 billion buyback program. $89 billion of stock repurchased in fiscal 25 alone, plus over $15 billion in dividends. Shareholders love this machine. Added up, an Apple is worth about $4.6 trillion. One of the two most valuable companies on the planet. The stock trades near $315, up more than 50% in a year. Wall Street's average price target? Also around $315. Read that again. The market has already priced in a lot of good news. Now the biggest story of 2026. On April 20th, Apple announced Tim Cook will step down as chief executive. His replacement, John Ternus, the 51-year-old head of hardware engineering. Ternus joined Apple in 2001. His fingerprints are on every iPad, every modern iPhone, and the Mac's move to Apple Silicon. He takes over September 1st. Cook doesn't disappear. He becomes executive chairman, handling governments and the big picture. But make no mistake, this is Apple's biggest leadership change in 15 years. Cook was the operations genius who scaled Jobs' vision into trillions. Ternus is a product engineer. Investors are betting that means faster, bolder hardware. The foldable iPhone may be the first proof. For years, critics said Apple was losing the AI race. Siri felt ancient. At WWDC in June, Apple finally answered. A completely rebuilt Siri. Conversational, aware of what's on your screen, able to take actions across your apps. The twist? It runs on a custom Google Gemini model with 1.2 trillion parameters. Apple pays Google roughly $1 billion a year for it. Sounds like surrender? Look closer. Apple's strategy is the opposite of everyone else's. Don't burn hundreds of billions building frontier models. Control the 2 billion devices where AI actually runs. iOS 27 even lets users pick their default assistant. ChatGPT, Claude, Gemini, Grok. Apple becomes the toll booth for AI on the iPhone. Distribution is the moat. Catalyst number 1, the foldable iPhone. It's already in mass production. A September launch alongside the iPhone 18 lineup looks nearly locked in. Apple reportedly plans about 10 million foldable units through mid-2027. It's the first genuinely new iPhone form factor in years. Apple arrives late to foldables, but with 2 billion loyal users waiting. Catalyst number 2, the great supply chain shift. Apple expects most iPhones sold in America to be made in India by the end of 2026. That's a historic move away from China, softening tariff pain and political risk. Add a product-focused new CEO and a services machine still compounding, and the bull case almost writes itself. The long game? Apple isn't chasing the AI hype cycle. It's positioning to tax it. 2 billion devices, upgraded every few years. Services revenue compounding at double digits with fat margins. New form factors on the roadmap. If even part of that plays out, today's empire keeps growing quietly under its new emperor. But now the risks, and they're real. Risk 1, geopolitics. Tariffs cost Apple $800 million one quarter, $1.4 billion the next. Some analysts see the total bill approaching $20 billion by the end of the decade. And Apple still depends heavily on China for manufacturing, components, and a huge slice of sales. Untangling that takes years, not quarters. Risk 2, the Google problem in both directions. Google pays Apple roughly $20 billion a year to stay the default search engine. A judge let that deal survive, but regulators appealed again this April. If those payments ever vanish, Apple loses nearly pure profit. Meanwhile, the new Siri depends on Google's model. That's a lot of eggs in a rival's basket. So what's the stock worth? At around $315, Apple trades right at Wall Street's average target. The bulls see 400, an AI supercycle with a foldable on top. The bears see 215 if iPhone demand stalls or the legal dominoes fall. After a 50% run in 12 months, the easy money has likely been made. Perfection is priced in. Surprises are not. How do investors get exposure? Apple trades on the Nasdaq under the ticker AAPL. It's also one of the largest holdings in nearly every S&P 500 index fund, so most retirement portfolios already own it. Some investors simply dollar-cost average into the ecosystem they use every day. Just know what you're paying for at these levels. So here's the bottom line. A legendary CEO hands over the strongest business on earth, record revenue, an AI reboot, and a foldable on deck, at a price that assumes nothing goes wrong. The next chapter starts September 1st. This video is for education, not investment advice. Always do your own research. If you enjoyed this deep dive, subscribe. A new company story drops every day.